Hello, everybody. This is Kimchi Crypto. I am going to talk about four exact reasons why crypto mega pumps still on the way, especially next year. Let's dive in. Firstly, more pain likely, market experts saying after biggest Bitcoin's loss since August this year. Is it a great opportunity to buy the dip or not? Well, currently speaking, let me evaluate the current status with Bitcoin price 200-day simple moving average. If the Bitcoin price is above 200-day simple moving average, well, we are still in the bull season. Whereas Bitcoin price is below this line, we are somewhat bearish. Currently speaking, the 200-day simple moving average Bitcoin price is around 70K, $70,000. Whereas we are, currently speaking, Bitcoin price is around 95 or $96,000, which is far above this line. As long as Bitcoin price is above this line, I think we need to stay bullish. Please note, for the last couple of years, Bitcoin price has risen up significantly from 16K to 108K, which is almost 600% up versus 7% or 8% drop in just 7 days. In the long term, it's just nothing burger, to be honest. And EDXM Global. EDXM is a crypto exchange founded by Wall Street giants like Fidelity, Starvale, Charles Schwab, and so forth. They founded another one named EDXM Global in Singapore, and this will be launched in Q1 next year. For sure, exchanges make money from transaction fees, and this means good time is still on the way in crypto la la land. Why mega pumps still on the way? As I mentioned, EDXM Global, as well as Binance US and FTX 2.0, they will reopen in the first second half of next year. That's what I think, according to the news articles, what they mentioned in the previous years. Please note the last bear market began with FTX collapse, and that FTX 2.0, well, if that's alive, that could mean something. Before that, this issue needs to be resolved as well. FTX creditor issue, distribution to the creditors. They set January 3rd next year as effective date for initial distributions to creditors. BitGo and Kraken will handle the distribution of the funds to FTX customers as part of the bankruptcy reorg plan. From Jan 3rd to March 2nd next year, creditors can claim their money back in cash, which can be generally interpreted as good signal for crypto price. Second reason to stay bullish next year is that FTX will distribute a lot of money to creditors, but how much? Well, total recovered funds are estimated between $14.7 billion and $16.5 billion, which is quite a lot of money. $15 to $16 billion cash distribution in the middle of the bull season. Well, I'm talking about the odds to be played out going forward, especially next year. For sure, some analysts estimate approximately $2.4 billion may be reinvested. Just a bit of, just some friction of the total fund might be reinvested in the crypto markets following the plan's implementation. With those with approved claims under $50,000 will receive repayments within 60 days of the effective date. Larger claims might take some more time until mid next year for full resolution. If this distribution was implemented in crypto, well, I'd say that could be a bad event. But creditors will receive cash anyway, and this can be good for crypto price anyhow. Don't get me wrong, Donald Trump's social media group, well, in talks to buy crypto trading venue named Bakkt. Trump's sons, first and second son, founded DeFi startup and bought a lot of Ethereums as well as DeFi tokens, including Uniswap, Aave, Chainlink, Etana, whatsoever. Please note, Donald Trump is the president of the United States of America. President elect, but well, we got several weeks to go. Third reason to stay bullish: FASB rule change. What does this mean? Under the new standard, companies must measure these assets, crypto assets, at fair value each reporting period, with changes in fair value recognized in net income. This marks a significant shift from the previous model where crypto assets were accounted for at costless impairment. The new model is intended to better reflect the underlying economics of these assets and an entity's financial position. Practically speaking, in the past, crypto was forbidden for big tech giants and corporations. It's always been burdensome debt rather than an asset class. Here's the thing: investors and stakeholders will now have a more accurate picture of a company's financial health when its Bitcoin is measured at fair value. The update also introduces new disclosure requirements, allowing companies to better communicate their holdings performance to investors and stakeholders. Just imagine, what if investors hear that big tech giants bought and hold tons of crypto, Bitcoin and Ethereum? There will be, for sure, denials. Well, I didn't buy it because of the huge volatility whatsoever, but this will spread out sometime next year. And then, especially from Amazon, especially from Microsoft, they will come out. Eventually, they will buy Bitcoin and Ethereum. Who knows, maybe in the second half of next year. Until then, you'd better stay in the market, not out of the market. Take a look at this market size. The derivatives market is far larger than that of bond market, stock market, crypto market, and all combined. Why mega pumps still on the way next year? Fourth, altcoin spot ETFs are on the way. Solana, XRP, Cardano, Avalanche, Doge, etc. Well, I've been here this crypto market since 2014, and I saw a lot of people are very much ignorant of Wall Street giants' greed. It's a gentle reminder. It's not just about Bitcoin, ETH, or even spot altcoin ETFs. It's more than all combined. What I'm trying to say here is crypto derivatives products. Even we cannot name those things, and that is coming. For your information, that could be index fund, AI fund, DeFi fund, gaming fund, top 10 ETF, top 20 ETFs, 2x, 5x, 10x, minus 3x leverages. Before that, the floodgates of spot altcoin ETFs will be open in 2025. What do you think?